So what's everybody talking about right now? Well, Gamestop, of course. I've been in financial services 20 years. This is just the latest crazy thing I've seen come along in the market. There's always something. So the question I'm hearing a lot is, how does Gamestop affect my investments in the market? Let's say you're a good retirement investor. I'm sure you are. Your portfolio is allocated into just some nice, boring, passively managed or index funds. You're doing everything right. So does GameStop factor into this at all? Now, I'm not going to give another explanation of what's going on with Wall Street bets and Reddit and the hedge funds and shorting the stock. You can Google that. It's been covered a million places. Not going to do that today. I'm focused right now on what this means for your retirement investments. So the good news is that so far, the manic buying is only affecting GameStop and certain other very specific stocks that they're targeting right now, like Bed Bath & Beyond, BlackBerry, AMC. They tried a little something with silver today, didn't work out. Now the rest of the market is still behaving rationally. And that's the important thing for you to know. Here's a quote from a CNBC article on this topic. Investments that are geared toward longer-term goals like retirement, your portfolio is comprised of higher quality names that aren't subject to these shorter-term market worries. And you know, that is absolutely very true. Here's what the Wall Street Journal said on the topic. Retail traders are associated with market inefficiency because they're considered more likely to trade on noise, accelerating surges and dips. So that's absolutely true and exactly what we are seeing right now. Now, I'm not putting down the traders. It's very different activity than long-term investing. And I'm not even suggesting that people don't do both. In fact, if you've been watching my videos, you've heard me say that for a long time. You can trade, you can make Wall Street bets, but that has to be very, very, very separate from what you're doing in your retirement account. So say you have one of these very popular ETFs in your account. Let's call it the Vanguard Total Stock Market Index, okay? It's not really total stock market. It's not global. It's just the U.S. But let's just use this for a point of comparison today because a lot of retirement savers do own this. Now, this tracks really all large, mid-cap, and small-cap stocks in the U.S. It's market cap weighted. And what this does is it tends to mitigate the volatility in your portfolio. Anytime you have a basket of stocks, that happens. Now, say something company specific happens with Apple, which is the most heavily weighted stock. Is that going to affect the rest of your portfolio in certain ways? Very likely, yeah. But that's a combination of economic or, like I said, company specific risk or something fundamental. Totally different than what we're seeing right now with GameStop with just this targeting of the hedge funds, okay? Not the same thing. So here's something that I've been talking about for 20 years, back when I was a market writer at Investors Business Daily and taught stock trading back then. Retail investors account for about 20% of market activity. They cannot hold a candle to, yes, the pension funds, your 401k, endowments, banks, insurance companies, all of these different institutions that really do move the market with their activity. But with retail investors accounting for about 20% right now of trading, that has less of an effect than the big institutions do. Because, of course, the big institutions have what? More money to trade than the guy in his basement, okay? And that's why even on the craziest days of trading, U.S. individual traders can and do move a single stock like GameStop. We're seeing it right now. But they don't have anything like the same impact on the overall market that the institutions do. So it's very unlikely, as it stands now, that this would affect your retirement accounts. And there isn't anything yet to indicate that the day traders, even in this big coordination like we're seeing right now, is doing anything to beat the abysmal historical record that day traders on aggregate do have. They really are not the best, okay? So if you do have a retirement account, avoid going all in single stocks. I've been saying that for years. Don't let the noise distract you and get you off of your plan. If you want to jump in and play some of these games, have at it. I'm not going to tell you don't do it, but that's not your retirement plan, okay? If you have any questions about your retirement investments, I am happy to help. Hit me up at kate@prosperitysource.com. Thank you so much for watching today. I appreciate you.